Hey everyone, welcome back. Ready for another deep dive. Today we're going to be looking into a story that's honestly kind of crazy. We're talking financial influencers and a recent case in India that really shook things up.
Yeah, it's a case that really brings up a lot of important questions about, who we trust for financial advice these days and how to protect ourselves when it seems like everyone online has a hot stock tip.
Seriously. So we're digging into the story of Asmita Patel. She called herself the options queen and the she-wolf of the stock market.
Catchy, right?
Oh yeah. Anyway, she built this huge following online before India's Securities and Exchange Board, or SEBI, banned her recently.
Yeah, and this isn't just about one person's, alleged misconduct. It brings up these bigger questions about financial literacy and just basic due diligence and, that allure of get-rich-quick schemes we see everywhere on social media.
Right. Okay, so let's back up for a minute. For anyone who hasn't heard about this, who exactly is Asmita Patel? What was she doing that got SEBI's attention?
Okay, so Patel basically positioned herself as this trading guru, said she'd figured out how to make consistent profits in the stock market, big profits.
And she had a huge following online, right?
Massive, like over 500,000 subscribers on YouTube alone, thousands more on Instagram and Facebook.
Wow, so she was everywhere. And she was selling courses too, right? Like actual programs where people paid to learn her secrets.
Exactly. She had these courses with names like Masters in Price Action Trading and Options Multiplier.
Options multiplier. What does that even mean?
Honestly, who knows, right? But the point is she was promising to teach people her proprietary system for making money in the market. Claimed she was managing a portfolio worth Rs 140 crore, which is
Wait, how much is that in dollars?
over 1.7 billion US dollars. And get this, she claimed to be mentoring over 100,000 students all around the world.
Okay, so she really created this image of massive success. I can see why she had so many followers. But what were the specific allegations against her? What did SEBI say she did wrong?
Well, SEBI accused her of running unregistered investment advisory and research analyst activities. Basically, she was giving people specific investment advice, like telling them what stocks to buy or sell without having the right licenses or registration.
So she was doing more than just like general educational content about the stock market.
Right. And SEBI says she was encouraging people to take some pretty big risks based on her advice,
Like what?
like liquidating assets, things like mutual funds and gold, even borrowing money to invest in the stocks she recommended.
Oof, that sounds incredibly risky.
It is, and the amount of money involved is huge. SEBI is trying to impound over Rs 53.67 crore.
Wow. And this is where things get even more interesting. Because when you look at Patel's tactics, there are some big red flags that should have made people skeptical.
Yeah, absolutely. And these are red flags that everyone should be aware of anytime you're evaluating financial advice online or even offline.
I think this is where your expertise comes in. Can you break it down for us? What were some of those warning signs? What should people have noticed that maybe something wasn't quite right?
So one of the biggest red flags is the promise of guaranteed high returns.
Yeah, she was claiming over 40% returns per year. Come on, that's just not realistic.
Exactly. No one can guarantee those kinds of returns consistently. It's just not how investing works.
It sounds too good to be true. It probably is.
Right. And another red flag was the pressure she was putting on people to invest a lot of money or even liquidate those assets we talked about, their mutual funds and things.
So not just, hey, here's an idea, but actually pushing people to make big financial decisions based on what she was telling them.
Exactly. And a responsible advisor would never do that. They should be encouraging you to diversify and think long term, not putting all your eggs in one basket based on some so-called hot tip.
And wasn't there something about insider information too? Like she knew something that guaranteed success.
Oh, yeah. The claims of insider information or secret strategies, that's a classic. It's almost always a sign that someone's trying to trick you. Real investing is about research and analysis and understanding risk, not relying on some secret formula. And then, of course, you have the whole branding and self-promotion thing, right? Options queen, she-wolf. It's all very calculated to make her seem like some kind of authority.
Yeah, I bet it made people feel like they were in on something exclusive, like something most people didn't have access to.
That's exactly the point. It's about building a following, creating a sense of community, and ultimately gaining trust, which can then unfortunately be exploited.
So we've got these red flags, this larger-than-life persona, and then a regulatory body steps in with some pretty serious allegations. What does this all mean? Why is this case so important, even if you don't follow someone like Asmita Patel?
That's the key question, right? And it's something we'll definitely explore more in a bit, because the Asmita Patel case is just one example of a much bigger trend. It really highlights how crucial financial literacy is these days, especially with social media and all these financial gurus online.
Okay, I'm hooked. I'm ready to hear more. Okay, so we've been talking about Asmita Patel, the options queen, and all those red flags that popped up in her case. But you said this is part of like a bigger trend, this whole conversation about financial literacy and online advice. So let's get into that. Why is this case so important even for people who've never heard of Asmita Patel?
You know, the internet has totally changed how we get financial advice. It's not just those traditional advisors anymore. Now you've got all these financial influencers,
Okay,
finfluencers.
influencers, right.
Yeah, and they're all over social media, sharing information, building communities, and sometimes giving actual advice.
Sometimes more than sometimes.
That's true, and that's the thing. While some of them are responsible, there are plenty operating in like a gray area, or even just breaking the rules.
Yeah, it's like the Wild West out there. Everyone's got the secret to getting rich. It can be tough to know who to trust, especially if you're new to investing or just don't know a lot about finance.
Exactly, and that's what makes the Asmita Patel case so important. It's like a warning. It shows how dangerous it can be to just blindly follow advice online, even if someone seems credible or has tons of followers.
Right. It's a reminder that we need to be our own advocates, do our research, and really think critically about what we're seeing online.
Absolutely.
So it's not just about avoiding scams, but also developing like a healthy skepticism.
Right.
Not assuming that just because someone looks successful online, they're automatically a qualified expert.
100%. Anyone can make themselves look amazing online. You know, show off fancy cars, vacations, talk about all the money they're making, but that doesn't mean their methods are actually good or ethical or even legal for that matter.
Yeah, it's easy to get caught up in the hype, especially when you see others seemingly achieving financial freedom so easily. Makes you think, why not me?
It really does, and that's why financial literacy is so important these days. It's about understanding how money works, how investments work, and how to manage your own finances in a responsible way. You know, having the knowledge and the skills to make your own decisions.
Okay, so let's say someone's listening right now and they're thinking, all right, I get it, financial literacy, important, but how do I even start? What are some things they can do, like today, to become more financially literate and protect themselves?
That's a great question, and it doesn't have to be overwhelming. There are some really simple things you can start doing right now.
Okay, give us the good stuff.
Mhm.
What are those first steps?
First, get curious. There are so many resources out there, books, websites, even free courses that can teach you the basics of personal finance.
Yeah, don't feel like you have to become an expert overnight. It's a journey.
Exactly. And remember, don't rely on just one source of information. Read articles from different perspectives, follow a few experts, and don't be afraid to ask questions.
So challenge your assumptions, right? Don't just accept what you're told, even if they seem legit.
Exactly. And here's another crucial tip. Learn to spot those red flags we talked about earlier. Anyone guaranteeing returns, pressuring you to invest, claiming insider information, that's a big no-no.
Like a giant flashing sign saying danger.
Exactly. If something feels off, trust your gut. Do your own research, and if you're still unsure, talk to a real financial advisor, someone qualified and trustworthy. Remember, it's your money. You have the right to ask questions and make sure you're comfortable with any decision.
Absolutely. Don't have to go it alone. There are resources and people who can help.
For sure. And that brings us to another important point, the role of regulation. As these finfluencers become more and more influential, it's getting harder for regulators to keep up and protect people from bad advice.
So this is a big issue, huh? What are some of the challenges regulators are facing in this new world of online advice?
Well, it can be really hard to tell when someone's crossing the line between just sharing general knowledge and actually giving specific advice, which needs licenses and registration in most places.
So there's a difference between talking about stocks generally and saying, buy this stock right now.
Exactly. And then there's a whole issue of jurisdiction. A lot of these influencers are online, they work across borders, so it's hard to enforce rules.
So someone could be in a country with like really loose rules, but their advice is reaching people everywhere, even in places with stricter rules.
Exactly. And then they're always coming up with new tactics, new ways to share information and build communities and sometimes, get around the rules.
So it's like a constantly moving target that regulators are trying to hit.
It is. And that's why financial literacy is so important. Again, while regulators are trying to catch up, people need to have the knowledge to protect themselves.
It's about being a smart consumer of financial information, seeing the red flags, making informed choices that work for you.
Exactly. And remember, the Asmita Patel case is just one example. There have been others, lots of them, where these finfluencers got in trouble for misleading or even fraudulent stuff. This is a worldwide problem, and it's only going to get bigger as the lines between entertainment, social media, and financial advice keep blurring.
So what's the big takeaway here? What's the one message you want our listeners to really get from all this?
Yeah, it feels like we're at this turning point, When it comes to financial advice and just how we get information online, it's amazing to have so much at our fingertips, but it's also kind of scary.
I know what you mean. It's both exciting and potentially dangerous at the same time. And honestly, that's why I keep coming back to financial literacy. It's like a superpower these days.
I love that. It really is about empowering yourself. So let's say someone is listening, they're ready to level up their financial literacy game. Where do they even begin? What can they do, right now, to get started?
Well, the first step is awareness. Just take a second and think about where you get your financial information right now. Is it social media, friends, family, news headlines? It's about being aware of who and what is shaping your understanding of money.
Exactly. And then ask yourself some questions. Are these sources actually reliable? Are they objective? Do they have any biases?
It's like checking the credentials of anyone who's giving you financial advice, even if it's just casual, like in a conversation.
Totally. And don't be afraid to look at lots of different sources, not just one. Read books, articles from different places, look at government websites about financial education, check out podcasts or blogs from people you trust.
So get a well-rounded perspective. Don't just rely on one person or website for everything, right?
Exactly. And another thing, don't be afraid to ask questions. If something doesn't make sense or someone's using all this jargon, just ask. A good source should be able to explain things clearly and simply without making you feel dumb.
Yeah, it's your money. You have the right to understand what's happening to it. Whether it's a financial advisor, an article, a podcast, don't be afraid to ask for clarification.
Totally agree. And remember, the world of finance never stands still. There's always something new products, new strategies. So stay informed, keep learning, and be ready to adapt.
It's a lifelong journey, but the rewards are definitely worth it.
They are. And it's not just about the money. Financial literacy can give you peace of mind, a sense of control. It can reduce stress and anxiety about money, and it can give you the confidence to make decisions that feel right for you, for your goals.
So it's about more than just the numbers. It's about having a healthier relationship with money overall.
Absolutely. And that's something everyone can work towards.
Okay, so we've talked about a lot today, Asmita Patel. The good and bad of online advice, the power of financial literacy, the role of regulation. As we wrap up, I want to leave our listener with something to think about.
Sounds good. What is it?
Imagine you're building a house. Would you trust someone who just showed up, said they're an expert, without checking their background, experience, references?
Probably not. Building a house is a big deal. You want someone qualified, someone you can trust.
Exactly. And your financial well-being, it's the same. It's a major investment in your future, your security, your dreams. So why wouldn't you be just as careful about who you trust with your money?
That's a great way to put it. It really makes you think we need to be just as careful with our money as we are with other big decisions.
Exactly. So to everyone listening, don't just follow the hype. Do your research, ask questions, think for yourself, and most importantly, take control of your own financial journey.
It's your money, your future. You deserve to be in the driver's seat.
Absolutely. That's our deep dive for today. Until next time, stay curious, stay informed, and stay empowered.
So that was today's episode of my Side Hustle Weekend podcast. For everyone listening, if you're ready to take action on what you learned today, here's where you can find more resources. First, head over to sidehustleweekend.com. I've put together detailed guides, templates, and case studies. And while you are there, don't miss out on my free newsletter, Side Hustle Weekend. If you found value in today's discussion, hit that like button and subscribe to join our Weekend Hustlers community. Turn on notifications so you don't miss our episodes where we break down more side hustle strategies. Check the description below for all the tools and resources we mentioned today. Remember, everyone's journey starts with a single step. Whether you're looking to make an extra $500 a month or build something bigger, start with what you learned today and take action. So, thanks for tuning in, and I'll see you in the next episode where we'll break down another practical way to grow your income.